And I think there are some very smart investors out there. Well, probably one of the arguably the smartest one ever, Warren Buffett, who whose company now has almost 400 billion in cash. He doesn't see value out there, so who knows? And there's an indicator he looks at, the U.S. stock market cap globally, the U.S. divided by GDP, and that's the highest it's ever been.
Innecco reports from the Zurich Precious Metals Summit. He mentions meeting the Gnome of Zurich and Clive Thompson, and highlights speakers like Rick Rule and Frank Giustra. He discusses the U.S. government's temporary shutdown deal, calling it short-term relief, but warning that government spending is too high. Gold rose about $53 to $4,053, and silver nearly $1 to $49.20, with a key breakout level near $49.50. Charts from the Gnome suggest the Dow Jones may soon face a major correction, possibly signaling the end of empire. The gold-silver ratio near 80 to 100 is historically abnormal, implying silver is undervalued. He also notes central banks like Brazil and South Korea are buying gold, showing a shift away from the dollar. Innecco ends by saying gold and silver remain underowned and could soon enter a strong bullish phase. Thanks for watching. Subscribe to Fine Metal for more updates.
Maybe South Korea is gonna have a foot in BRICS and a foot in the West. Who knows? I think that's huge. It just goes to show that the world's moving away from the dollar as a major reserve asset, and they're moving towards gold, and it's not going to stop. And I think actually gold could surprise everyone on the upside in the next few months, because I think a lot of people are bearish now after the correction that we've had. They're saying, oh, it's going to be months till we'll make new highs. Some people are saying it's the top, that gold is a bubble. I don't think gold is anywhere near a bubble. It's still heavily underinvested. It's the central banks that are front-running the public and investors. And I think investors next year, as Clive Thompson has said, they're going to look at the performance of gold, silver, and the miners for 2025, and they're going to ask their fund managers, their wealth managers, their bankers, why didn't you put me into gold? Please get an exposure to gold. So yes, it's a golden age. Revaluation, that's still in the cards. I printed this one out. It's the gold-silver ratio from 1500 BC. Yes, BC to 2008. Gold, silver. Silver is in German. Doesn't matter. It's a very similar word, isn't it? But you can see here that it's been below 20. Well, throughout history, except in the 20th century, where we've seen it go up massively, of course. This is only till 2008, but it doesn't really matter. It's just to get you an perspective that right now, where we are around 80 or above 80, or where we were recently above 100, is a total aberration of 3,000-year history. Some people might say, oh, it's different now, but I'm not sure. I'm not sure it's different now. So I think there's a very good chance we'll go back to 15 to 1, 16 to 1. We could even undershoot because we've overshot for so long, right? So I thought that was interesting. But you can see here he's got a wave 1. And I think that was from 1789 to like 1837. I think there was the Panic of 37. That was wave 1. Wave 2 is the low there. Well, the Panic of 87 was wave 2. Excuse me. The rally was up until 1887, and then wave 3 is the top in 1929. The crash is wave 4, and according to him, we're in wave 5 right now. And it's a very long wave. It's since 1932-33, and he thinks this wave is almost over. So we could see a big correction. And if you look here, he's got the big crash in 1929. The market dropped 13% in one day, and then in 87, the market dropped 21%. October 87. So the other thing he looks at is Fibonacci numbers, which is something I do as well. 13% is a Fibonacci number. 21 is a Fibonacci number. If you add 13 in the previous Fibonacci number 8, that's 21, and then you take 21 and you add 13, you get 34. So he thinks we're ripe for some kind of huge crash in one day of 34% in the stock market. And if you look at where we are, a 34% drop would not really look like, let's say, the crash in 29, because we're up so much that it would, we could notice it, but he thinks that could be what signals the end of empire. Yes, I'm not having a go at Americans. I'm having a go at the deep state American empire that's been really in place since the end of World War II. That makes a lot of sense. That makes a lot of sense. But is it going to happen this week? Next week? Who knows? It could be next year. But I thought that was really interesting. It would correspond with the end of empire, a big crash in the Dow, and he thinks the crash in the Nasdaq and S&P would be even bigger because they're highly leveraged to the tech. So right now the price for spot gold is $4,053. It's up $53. We closed at $4,000 on Friday, the spot price. The high's been 57 and the low is 39.96, so up 1.3%. While silver is doing really well, it's up almost a dollar. It's up 87 cents or 1.8% at 49.20. The high's been 33. Of course, I don't have to tell you what the key level in silver is. It's 50. Let me have a look here at the chart, the daily chart. We had a high last, when was it? 31st of October. That was at 49.37. That's a bit like a double, well, not a midpoint of a double bottom right now in silver. So if we can go through, let's say, 49.50, that would be very bullish in the short term. Longer term, on the weekly basis, as I said, we're not out of the woods. We still have a lot of room on the upside, and the all-time high was 54.60. That was on the 16th of October. But the longer-term charts, if I look here at the weekly, starting to look better. The monthly chart as well. Right now, if the month ended today, we'd be closing at a new monthly high. So, we just need to be patient. The stock market this morning, the Dow is up insignificantly. Actually, it's only 0.2%, mainly because it doesn't have all those tech stocks that are in the S&P and the Nasdaq. Those two are up quite a bit. Nasdaq 100 is up 1.2%. S&P is up 0.75%. On the currency front, it's fairly quiet. Aside from the yen, the dollar's pretty steady versus the other currencies. The dollar is up 0.25% versus the yen. Let's have a look at the bond market, see what treasuries are doing. Yeah, the yields are up. The 10 years almost at 4.15 now, and the 30 years approaching 4.75. So that's kind of a problem for the markets. This is the Swiss mortgage rates from 1850 to 2021. Again, yeah, right now we're pretty much near the lows, so it won't make a difference to look at. This is just a perspective again, and you can see here that mortgage rates in Switzerland, we've got an aberration too, and the Nome of Zurich thinks it's the biggest bubble in Switzerland is real estate. So from 1850 till 2000, the lowest mortgage rate you ever had was just below 4%. The highest was 7. So it averaged around 4.5, 5, and now we're like at 1, which is totally outrageous. And I noticed President Trump said that there's going to be 20 trillion injected into the U.S. economy still in 2025. I'm not sure where he's getting this number from, whether foreigners really want to invest 20 trillion while they're getting away from the dollar, or maybe he's thinking of revaluation of gold. Who knows?